What do you make of the dollar moves today? Why such strong shifts against the yen, against the euro, against the pound this morning?
I think, the first piece of it is that there's a very strong bullish dollar consensus. There's a fair amount of positioning that's long the dollar. And coming into the end of this week, what we saw was a rally in the U.S. equity market that started yesterday afternoon, and the dollar's been falling ever since. So the sort of the genesis of this correction is optimism about a softer landing in the United States, optimism that there isn't going to be more trouble for the U.S. equity market. Perhaps that's helped by optimism that the European response to the gas crisis or the energy crisis is going to be to fight it with fiscal policy. The UK energy support package is huge in financial terms, and it's it's going to make a big difference. It'll bring down the peak levels of inflation. It'll probably, therefore, it could help bring down the peak levels of interest rates. Certainly, it'll soften the blow, and it's likely to be repeated across Europe. If you carry that sort of forwards, you're looking at a world where you're saying, well, maybe the economic outlook globally isn't quite as nasty as people had thought. The soft landing view in the US gets some help. All of this can get blown out of the water if what we run into next are genuine energy shortages and rationing and things like that over the course of the winter. But I think all of this was enough, if you like, to get some long dollar positions being squeezed out, some shorts in the euro and sterling, yen, Australian dollar, New Zealand dollar all get squeezed out, and a general Friday risk-on mood underway.
Yeah. Well, but that raises the question, Kit, of whether or not this is actually a sustainable move. I mean, can the euro really hang in there when, yes, the ECB is hiking, perhaps aggressively again in the months to come, and yet there is that energy crisis that you're describing?
I think it can chop around along a lot for a fair amount of time from here. I don't think the low in the euro is dramatically lower than here, nor do I think the low in sterling is for this move. We've come an awfully long way. The bad news is, to some degree in the market, the challenge, particularly in Europe with the energy crisis, is that it's not obvious how you get a better mood and a better economic outlook before the end of the winter. So we may find that the low in the euro is somewhere between 95 and parity. The low in sterling is somewhere between 110 and 115. In other words, they could be not that far from where we are at the moment, but that we chop around with the market, unable to make more than marginal new lows before it gets another short covering bounce, because we have priced in a lot of bad news, and you need something new that we haven't seen to kind of change the picture from here.